Welcome, everybody. Today, we're going to talk about, do you really know your numbers for brick and mortar business? I'm excited. My associate here, Dave Baldwin's going to be running the show, and this is part of our dojo roundtable for brick and mortar business, where you can get hands-on group help in the program. Check the text below. Over to you, Dave, for the show.
Thank you, Martin, for the great introduction, and I'm glad that we got to put this together tonight here. I'm looking forward to sharing a handful of different things about finances from a standpoint of managing a small business tonight, and I got a lot to go over here, so I think I'll dive into it in just a second, but a little bit about my background. I started out, I always say I have switched careers a handful of times, and I think that it's helped me to develop a little bit more of a holistic, well-rounded perspective when looking at a small business. I started out in technology. I was running wire through cabinets and programming computers for about 10 years. And I moved into marketing strategy. The first time I tried to start my own business was 2007. And admittedly, it was a bit of a rocky start. But I learned a lot from just having a lot of conversations with small business owners about their marketing and what they were doing to try to generate leads and get customers and come up with a message that would be appealing. And one of the things that I learned through that process was that there was a lot of small businesses that seemed to think they had strictly a marketing problem, that they just needed more customers. And what I came to find was that there were issues in other areas of the business that were preventing them from being able to get customers. And so my focus kind of gradually started to shift away from marketing into really looking at the guts under the hood of a business and figuring out, okay, where are you inefficient? Where could quality be improved? Where could service be improved? All those kinds of things. And I found myself hitting a brick wall at a point when I was I would have conversations with business owners about some of their operational issues and all the other areas that impacted the business. And I kind of felt like I was not getting the full story, and I wasn't really able to see a clear picture. And what I found was that when I went to work doing for an accounting firm for several years, and I spent all day just looking at balance sheets and profit and loss statements and cash flow reports and everything, I said, okay, when I look at the money, that's what tells me the real story of a business. And that's when I can find out quickly what's really going on. And so I've since then, I've been working independent and consulting since 2020. And at this point, I've been looking at how to integrate those different disciplines and those different things that I've learned, and starting with the financials, but then kind of delving into the other areas of the business. So tonight, I'm mainly just going to talk about some of the financial analysis as a starting point and a baseline to really get a good, clear reality picture of what it looks like to gauge the health of a business based on objective data. One of the things that I always say about financial reports, one thing it's helpful to bear in mind is that you may have QuickBooks or Xero or any other standard well-known accounting software. And a lot of business owners that pay for this and possibly are paying for a bookkeeper, or maybe they're doing it themselves. A common frustration that I hear a lot of times is, okay, I looked at my P&L report, but it's not telling me what I need to know. And part of the problem is that accounting software is not designed for business owners. It's designed for tax accountants, which is fine. I mean, that's what it's supposed to be designed for. It's designed to basically make filing your taxes more manageable. But there's a lot of areas of business management and operational accounting that I see a lot of gaps in the way accounting software is typically set up and designed. And so we're going to address that a little bit tonight. I've got a couple of spreadsheet examples I'm going to show of ways to do some non-standard reports, but that are more likely to show you what, from a standpoint of a business owner, you're more likely to be looking for. But one of the things I want to talk about is cash flow forecasting. This is an area that I think every business should at least be doing some of the times. I mean, cash flow is not always an immediate concern. I mean, if there's enough cushion that that the lights are going to stay on every month. But one of the things that can be an impediment, even when the money is good and revenue is strong, is if you have to make a decision about whether to hire somebody, whether to make a major investment, whether we need to move to another location or expand a facility. Possibly businesses that have to buy inventory and maybe have to buy a large amount of inventory at one time. I see a lot of times where profitable businesses still run into cash flow crunches because there's just these situations where you have to lay out a large amount of cash in anticipation of hoping that the revenue is coming to cover that. And so one of the things that can help you stay grounded in reality is to have a cash flow forecasting model in place. So I'm going to show you here. I'm going to put on my screen right here what you've got. This is a future facing tool. This is not a report of past expenses, but this is basically the idea here is to say, how much money am I going to have in the bank based on what's happening? Red numbers are bad. And I'll just show you what I've got here. So I say, here's today's date, next month's date, following month, everything, so on and so forth. So I say, okay, let's say we have $6,000 in the bank. And obviously I'm not dealing with large dollar amounts because the amounts aren't important. It's the concepts. But let's say, and so this particular model is used for personal expenses and household budgeting. The same thing works, whether it's for personal or for business, but we start with today's bank balance. And I've got down here, let's say, okay, we've got after-tax income, monthly expenses, and then based on the difference of the two, we have a net cash flow. So this basically says, okay, for the next 30 days, we're expecting a net positive cash flow of $175. We will have $61.75 at the end of the month. That carries over to next month, so on and so forth. Every month works the same. And if you wanted to, I have this broken out where you can show all kinds of detail if you want about the individual expense categories to see, okay, what's the makeup of this 83.25, and that adds up these numbers down below here. So the scenario I did here is, let's say next month we're getting the roof repaired. We need $5,000 to pay to have the roof fixed. Are we going to be able to weather that? And we say, okay, we're going to have a net negative cash flow of $4,700 here. And what we're showing here is that in August, we're now going to hit a shortfall. We're actually going to run out of cash and need $545. Not a bad thing when you can see that 3 months ahead and you can see it coming. And that's the whole point of a cash flow forecast, is you can see those shortfalls. But one of the other things that you can do is that you can actually then make changes here. So let's say if you wanted to add another expense, you can add more expenses down here if you're thinking about buying something, and then these numbers update up here. But the whole idea is, and it's not that you necessarily need to use this spreadsheet specifically. This is one that I made, but and this is a fictitious example, but the basic idea here is, are you doing something to basically look at, okay, how much do we have? How much is coming in? How much is going out? And look at, month after month, what is there anything to be concerned about looking 12 months out into the future? I would say at least 90 days into the future, maybe not necessarily a full year, depending on what kind of scenarios that you're juggling. But this can really help with budgeting. It can help with payroll. It can help with hiring decisions. But I think more importantly, a good cash flow forecast, frankly, is good for your mental health as a business owner, because a lot of times we can get into a lot of anxiety about not really knowing the state of the money. And this is one simple tool that I think if you make a consistent practice of, can help you to just really stay in touch with reality. And I realize I'm going to put the screen share back up for 1 second. There's one other piece of this I wanted to show. This is a practice that I follow here, which is and this is, again, it's a fictitious example with some old dates on here because I made this a while ago. But what I actually do is I will log my cash flow forecast. So let's say today is May 8th, and I'm saying, okay, I think that 3 months from now, I'm going to have $16.95 in the bank. What I'll actually do is I'll put today's date in here, and I'll say 5/8. I'll say 8/8 for 3 months from now, and I'm saying, what did I say that number was? $16.95. So that's what I think I'm going to have. And then that way, 3 months from now, I'll actually look at how much I did have in the bank. So here are some fictitious numbers to show you how this operates. Black is good, red is bad. Obviously, black, you're in the positive, red, you've lost money. So, and in this case, I've actually said, okay, in January of 2021, I projected that I would have a $4,000 balance. In fact, I ended up having only a $2,100 balance. So it was $1,900. Essentially, this tells me that I was too optimistic with my projection. And if you see all these red numbers over here, that should be an indication that I have a pattern of being too optimistic with my cash flow. But versus if you see all really big black numbers, that would tell you that you're being too pessimistic and possibly too conservative with your approach. But that's a practice that I do. I mean, every month on the first of the month, I go and log my cash flow forecast. I do that for my business and I do it for my personal finances. And I've actually found that I'm too pessimistic, and it kind of gives me some peace of mind to think, oh, well, I thought I was going to be a lot worse than I am 3 months ago, but it all worked out. Next area I want to get into is accounts receivable. Accounts receivable. Now, this is not always an issue for a product business. If it's a retail store, I mean, there is no receivables in a retail store. You know, an ice cream shop, they buy their ice cream cone and they leave. But for service-based businesses, this can be a major issue. Like for anything from construction, it could be an accounting company, marketing, a graphic design firm. Especially if you have a large number of clients and you have to invoice them for a service. Receivables are not necessarily an issue in the beginning when you as a business owner are personally attending to every job, because you kind of know what's going on, your head's in the game, and it's, when you only have 5 customers, you can keep track of them in your head and not really have to worry about who's paid and who hasn't. And usually at that stage of the game, if you're not getting paid, you don't eat. So it's kind of hard to forget. Where receivables begin to become a problem is during that growing pains phase, where maybe you've got 3 people and now you're adding a 4th and a 5th person, and you're going from 1 million to 2 million to 3 million to 4 million. That curve right there, like when you're really starting to grow and when your business is starting to pick up steam, that's where you start to find out if your controls and your disciplines have really been adequate that you had in the beginning, or if, that's when the cracks in the system start to show. And the unfortunate part about accounts receivable is that when you're the owner of a business and you get to the point where you don't know all the customers because you're relying on other people to manage those accounts, if you don't have a system in place to make sure that you're actually sending out invoices and billing your customers every month for all the work that you did, I mean, I've seen companies lose a good chunk of money because they just didn't bill for the work that they did, and there was no check and balance in place. So one of the things that I find is really critical is you've got to have something outside of your accounting software. Your QuickBooks is great. After you send somebody an invoice and it's in that system, you won't forget about it. But if you never put the invoice in there in the first place, you don't have any way to know by looking at your books. So one of the things that it might be a CRM system, it might be a project management system, but there's got to be some kind of a written record to say, what work did we do that we should have billed for? And that should be reconciled against your records in QuickBooks. I would say at least on a quarterly basis to look and say, okay, what are the list of all the jobs that we did? And how can I verify that we actually invoiced our customers for every single one of those jobs? And, I think if you get in that practice, it's not too hard to cross-check the two. I mean, obviously the depends on what system you use, but that's one thing that I think really tends to not be, like, a lot of times it slips between the cracks because a lot of times when business owners pay a bookkeeper to handle their receivables, the mentality is, okay, well, that's been handled, I don't have to think about it. And it tends to not become apparent until there's a lot less money in the bank than they think they're supposed to be. And then by that point, you're possibly 6 months out and you haven't invoiced people for work that you did a while ago. And then you possibly run into danger of not being able to collect on some of it. And there's a whole world of ills there, but that's the one piece. Accounts receivable, I would say, is the biggest area that is the biggest cost for a lot of businesses if you don't have that process in place. So I want to talk about also mini P&L statements, as I call it. And so anyone who's familiar with a P&L statement, essentially you've just got your income, you've got your expenses, you've got your net profit, pretty simple and straightforward. But when you look at the different ways that you make money, so let's say if you've got 100 different customers, my question to you is, okay, let's say if we made, we brought in $1 million in revenue and we had a net profit of $200,000. My question is, how do you know which of those customers you made money on? Did you make 20% on each of those jobs across the board? Hint is probably not. Very few businesses have margins that are that consistent from one customer to the next. And so my question would be, how do you know what your actual cost margin is on each individual customer or each service line? Or for a retail store, let's say if it's a coffee shop, how do you know, what time of day you made your money, what products you made your money on, how much, which customers you made your money on? How do you capitalize on that foot traffic? And do you have the data to be able to tell you what that is? Because reporting financial data in the aggregate is the easy part. To be able to say how much money did your company on the whole bring in, you can have a mediocre bookkeeping system and be able to figure that out accurately. But the real key to being able to increase your profitability as a company is you've got to be able to dial it in a little bit more and say, okay, where did I make money? Where did I lose money? And also you've got to think about overhead, because one of the things about overhead is each, if a company is not making as much money as it could, you could make money on an individual product or service line, but when you factor in how many different sales you've got to make to cover your overhead each month, you might find that you either need to raise the price of a product, or you might just need to increase your volume, or see if there's anything you do to decrease your overhead. But the key to all that is to look at your margins on each individual job. Now, I want to give you another visual example to get into my next concept I want to show you here, which this is, it eliminates a common source of confusion and frustration with business owners. And I'm going to give you a little preface before I put this up on the screen, is that what I'm about to show you is a bit of a hybrid report. It's actually a combination of a cash flow report and a P&L statement. But the reason for putting this together was in response to some questions that I've gotten from numerous business owners. And here's the question that comes up a lot of times is, okay, you're telling me that I made a profit last year. Like my P&L statement says I made $500,000 in profit, but where is that money now? I don't see it in my bank account. And so one of the things that can be a source of confusion is there is a lot of money that goes out of your bank account does not show up on your P&L statement because it's on your balance sheet instead. And conversely, there actually are some expenses that don't actually come out of your bank account, typically, amortization and depreciation expense. So I'm going to show you an example. Here's a visual example of what can bring a little bit more clarity to what I'm talking about here. So if we go back to my screen share here, so this is it's similar to the cash flow worksheet that I showed you here, but this is actually a historical record instead of a forward-facing tool. So let's say if we look at last year, we look at January of 2022, and it's a generic model. These are fictitious numbers, but I basically said, okay, so let's say in this top line we've got sales of X amount, and then we've got cost of goods down here, and then we have payroll. We've got let's just say so if there's supplies down here, and then we've got paying rent on a building, et cetera, et cetera. All of this right here would be your P&L statement essentially. And so you can see down here, you see a P&L net profit. It's actually a net loss for January. And but here's the part where I'm going to highlight the source of confusion. So let's say at the end of the year, all told, I actually have cumulative numbers showing on here where I add up all these numbers. At the end of the year, we show a net profit of $1,031,256, right? But there is only a cash flow of $623,000, as you can see up here in row 17 and row 20, the difference between these two numbers. So that's a pretty big disparity, just over $400,000. And so part of what we have to look at here is we've got a couple of the things that come into play. So if you look at all the sum of these numbers, it's $407,000. But there's debt servicing. That's one factor that if you make principal payments on a loan, that does not show up on your P&L statement. That's balance sheet activity. The interest may show up on the loan, but also depending on how your bookkeeper records the entries, they might put all of it in the balance sheet. So right here, we've got $50,000 of expenses that are coming out of the bank account of your business. And this would be distributions and dividends, by the way. So that would be if an owner takes money out of the company and doesn't run it through payroll, that's classically going to be considered a shareholder distribution or possibly a dividend. And in either case, it's going to be balance sheet activity. So right here, we have $50,000 comes out of the bank, but it's not on your P&L statement. So you're going to have a negative cash flow of minus $59,000, but a net loss of only $9,000. So when I look at the end of the year, in this scenario of the business, you can see these green numbers over here would show that this business is stronger toward the later half of the year, and they lost money during the beginning. But this is a classic example of where if you don't understand how the difference between balance sheet activity and P&L activity shows up in your financial statements, you could look at this and say, okay, well, I made $1 million. Where's the money? Why do I only have $620,000 in my bank account when I made $1 million? Where'd the other $400,000 go? So this is a very simplistic example, but there's a lot of different other factors that come into play that can really skew the views of the numbers. I could go layers and layers into that, but I thought that was just probably the most simple way to illustrate how if you just look at a P&L statement, it really doesn't give you the full picture of what's really going on in your business. So one of the things that you really want to think about when you're putting together a bookkeeping system, when you're looking at your numbers, one of my kind of guiding milestone mantras about any bookkeeping system or any financial system is the whole point of it is about being able to make better decisions. And it essentially should be a compass needle to tell you, when you look at your financial statements, does it help you to make a better business decision? In other words, do you look at your financial statements and say, does this tell me what I need to do next? Does this tell me where my next opportunity is? Does this tell me where I can make money, essentially, or why I'm not making money, or what I can do about it? And if it doesn't, you've got to really ask some fundamental questions about what would I need to see? What numbers would I need to see to tell me if my business is really doing what I need it to do or not? So to wrap things up and tie it all together, the one piece I'll share with you is just some questions I recommend asking your bookkeeper at the end of a month. And these are questions to kind of gauge, first of all, does your bookkeeper have the skill level you need? Have expectations been set correctly with the bookkeeper? Do they understand what you need as a business owner? Because a lot of times there are actually really good, technically competent bookkeepers who are really good at what they do, but they've been trained to do bookkeeping in the conventional model that I see, which is just really focusing on getting taxes filed at the end of the year. And a lot of times there's a level setting that needs to happen where, there's a conversation that needs to be had about here's what my needs are as far as getting the clarity I want around my numbers. So one of the things about, if you look at cash flow forecasting, you can ask your bookkeeper, okay, how are we doing here? And more specifically, are you anticipating any shortfalls within the next 6 months? Is my operating reserve going to hold out? Is there anything any reason I should be concerned about that? And I would just kind of pay attention to what kind of a response does your bookkeeper come back with on that? And if it's something that they don't know how to really gauge, that's something that's going to have to be worked with to come up with a system for that. But if you've got, it's a fairly simple system to put together, like the example that I went through earlier. And I definitely recommend that anybody who's paying a bookkeeper should have them maintain that kind of a forecast and basically just kind of say, keep me in the loop about, what's the health of the business? Or, one of the things that we want to look at is, are the expenses higher than I thought they were going to be in any given categories? And if so, do you know of any reason why they would be higher? Or, essentially you can run a budget versus actuals report. There's a number of different tools you can do for that, but I would rather just I would go back to the bookkeeper and say, what's out of line, and what areas do you see for improvement? Accounts receivable, we talked about that earlier. Who owes me money, who's behind on paying, and when are we expecting to get the money? Depending on if your bookkeeper handles receivables for you or not. I think that's something you definitely want to be looking at least on a monthly basis. And let's see, then if you want to look at job costing, now this is something that I think a lot of bookkeepers don't know how to do and may not be able to do depending on the data that you provide to them, because this is a little more involved. But I would say, one thing you could always bring up is, could you have a sense of which customers we're making money or losing money on? And do we have any data to back that up? And one of the things that sometimes requires a bit of digging there is that requires doing things like, if you buy supplies, looking at, okay, do you have any kind of documentation in terms of which job you consume these supplies on, or do you just throw them all in the closet and just use them whenever you need them? And, do you know where that supply cost went? How rigorous are you about keeping track of what your employees did all day? Who's keeping track of those time logs, and how do you know where that labor cost is going? Which job is it being spent on? Now, obviously, you need some reasonable allowance for administrative time, or just handling general tasks. But I believe for the most part, employees that are getting paid to work all day, you should have an idea of what you paid them to do. And I think that time tracking and time logging is one area that I see as a pretty big weak spot for a lot of businesses. And again, it comes down to, it's one of those things that when the money's flowing freely, nobody seems to worry about it too much. But when money starts to get tight, and you start to take a closer look, unfortunately, by the time money gets tight, a lot of times it's too late. So one of the things that I always say, when revenue is strong and when cash flow is strong, that's one of the most important times to start putting these disciplines in place and start looking at these things on a monthly basis. Because if you're hemorrhaging money, you got to stop it while the money is flowing a lot. I could tell you stories about that one, but hopefully everyone gets the idea. And I think just a couple of the other things to look at are there any former customers that you haven't followed up with in a while? Are there any obvious opportunities to increase sales? Your bookkeeper may actually have some perspective on that. I think a lot of times people that are knee deep in the money tend to have a pretty good insight, and especially if they're not as close to it as you are as a business owner, they may bring some fresh perspective on that. But if you've actually got a CRM system, or if you're keeping all of your customer data in your bookkeeping system, your bookkeeper could actually pull up a report or without too much effort, figure out, hey, who hasn't bought from us in a while? Who could we be possibly doing email campaigns? I mean, I think there's a lot that of money that gets left on the table because of not doing simple follow-up to stay in touch with customers. And your bookkeeper may be able to help you with that just by virtue of the position that they're in. At the end of the day, you can look at all this data, you can look at all these reports, you can look at these numbers, but the real question driving everything should be, where's my next opportunity to make more money? Is that increasing my volume? Do I have the store sitting idle for part of the day? And, or do I have a line out the door and people are walking past because they don't want to stand there and wait in line? Do I just have, am I sitting right on top of plenty of demand, but for whatever reason, they're not coming to me? There's a lot of different factors that can drive that, but I think if you look at your financial data, you can start to really get some clues, and it's not necessarily going to be a big blinding flash of insight, but a lot of times you can find those incremental changes that can make a little bit of difference compounded over time.
Excellent. That was fantastic. I had something
think,
to
Dave,
it.
that was amazing because I don't know what is P&L. So
Well, thank you, and I realized I just I fell into an acronym territory again. So P&L is profit and loss. It's a profit and loss statement. So I should have said that up front, but I appreciate that. So, and I saw there was a question in chat from Ann about systems I'd recommend, and I think the question, I mean, that depends on what type of systems. But
and Dave, if you'll just restate the question, so we'll have
yes, absolutely. So the question was, are there any systems I would recommend? And I mean, personally, my go-to is QuickBooks Online. I know they're moving away from desktop. I have used Xero a little bit, and I would say depending on, I mean, I think QuickBooks Online is adequate for most businesses, and unless you're you're getting into a larger company that needs an enterprise type solution. But I would say, and as far as CRMs are concerned, I've used a handful of them. I mean, I've seen Salesforce, Insightly, a handful of others, and I think in a lot of cases for a small business, they don't necessarily need one, don't need a full blown CRM system. But if you do, I mean, I don't have a strong opinion about one versus the other. I mean, I think the real question is a CRM is a customer relationship management is what that acronym stands for. Thank you for the question.
Yeah.
I was just going to ask what CRM is.
Yeah.
So what would you recommend? Like, from what would you think is the best?
So a CRM, so it's a customer relationship management tool. What the goal of that is it's a sales tool, and it's not something that a brick and mortar retail store would use, but as much as a service-based business. What a CRM does is it keeps track of prospective customers and their information, and you can track. Yeah, this is more, they're more typically used in B2B sales with a long sales cycle where you might be talking to a customer. You might have 4 or 5 stakeholders. You might be talking to a customer for 6 months to a year.
You don't need, sorry to interrupt you, but the CRM is not for a small business, right? It's for a larger volume.
Well, I want to add, I use one. I use Nimble, and it's for mainly when you, like you said, it's services or projects or something like that. And then there's some industry-based ones of CRM. So Nimble that I use,
Would you spell that one?
Nimble. Nimble. Nimble's one I've used for years. It's called a social. Yeah. I'll put it in chat.
Okay. Sorry about that.
No problem. I'll put it in chat. And Nimble is what's called a social CRM. And so when I put the person's contact information in, it goes out on the web and actually starts to research them. and brings it in, says, is this their LinkedIn? Is this? And then you can do, if you do a job, say how much potential money you'd make on them. So this would be for job costing or projects, how much, and then keep in notes what you did. Now, like Dave said, this is where you need to then take that data and maybe put it into a Google Sheets or Ledger. So, but at least you're capturing it while you're interacting with the customer real time. And so, for example, in training, my assistant knows where to look to find out what did we charge for training the last time on that particular client. And so we understand, and my bookkeeper has access to it as well, which Dave does collaborates with her. So that gives that information. So it's more like capturing that data and not just trusting it's all in your QuickBooks, right, Dave?
Mm-hmm. Yeah, QuickBooks is not a good CRM tool. People try to use it for that, but it's really not designed for that. It's a financial reporting tool. So yeah, I mean, I think to Martin's point about, in his example of how he uses.
People have no respect.
Well, I'm sorry, what'd you say?
As my agents have no respect.
Oh, okay. Did you have a question? I didn't want to miss you. Your agents have no respect. Is that people in your room or
outside?
Oh, okay, outside. Oh, I see. Somebody outside her area. Okay.
No, it's our team.
Okay, a team. Okay.
So I couldn't hear the last words.
Oh, okay. All right. Oh, I see. There's a lot of background noise for it. Okay. Just repeat what you said, Dave.
Yeah. So basically, so Martin gave the example of how he uses a CRM system. I think the key takeaway is that, the value of a CRM system, customer relationship management, is to keep track of like a level of detail that's not going to be in your financial reporting software. Like QuickBooks is not effective for the purpose of CRM, is it'll keep you can put your customer names in there, but the thing about QuickBooks is, since it's only a financial reporting tool, is there's really no reason to put a customer in there until they've actually paid you, or until you've invoiced them. But there's all kinds of different things that can happen in the sales cycle before you invoice somebody. And I think that's, for me, is the value of a CRM tool, is that you can keep track of all that activity leading up to when you invoice someone. So going into QuickBooks is the last step of the gate. But I think the real value of where a CRM system becomes critical is when you have a sales team in place. Like if you've got multiple people and potentially different salespeople working on the same deal, or when you get to the point where there's too many moving pieces for you to keep track of it all as a business owner, and you've got to have some way to keep your eye on the ball to say, okay, is somebody moving each of these deals forward? Or in which ones are still live and which ones are dead, and be able to look at a dashboard and say, okay, how much revenue do I have in my pipeline? It kind of goes back to the cash flow forecasting, is that having a good CRM can really help you get a better reality picture of what your sales are potentially going to look like 90 days and 6 months out.
Yeah.
So Dave, I think I have to leave, but for your next one, hit me when you do the next one. So I'm going to see if I can come in. Sometimes I don't know what happens. Doesn't allow me to come. I think I need a new computer.
Well,
I don't know what happens, but today was my lucky day. And when you do the next one, just send me my email. I put my email up, and then I think I put my email.
Okay.
Because
we announce it in the Brick and Mortar group. So watch for that. That's the key thing.
I definitely will.
To understand.
I have to make one phone call, so I have to leave.
Okay. All right. We'll let you go. Excellent.
All right. Thank you. It was my pleasure meeting you. It was very great, and looking forward to be on your Zoom again.
Excellent.
So I had a quick question.
Yes.
The spreadsheets that Dave was showing, were they something that you get, Dave, from QuickBooks, or you have to export to QuickBooks to a separate spreadsheet, or what? I don't.
So these are homegrown. I made these myself, but
and Dave, can you restate the question?
So the question was, for the spreadsheet examples that I went over, can that be exported out of QuickBooks? And the answer is no, they can't. But That's one thing. I mean, it's not too hard to put this together. I was showing it as a conceptual example of, part of the reason for having something outside of your QuickBooks system for a couple of the different things I wanted to break down. But I'm happy to, share the templates if that would be of value. I've got it's a pretty simple. I mean, it's a simple template to put your numbers into, and it can be done for 1 month or 2 months. But it was more of just to kind of show a conceptual example of what the different numbers are you can look at beyond the standard reports in QuickBooks.
Oh, okay. Because I haven't used QuickBooks a lot, but we do get our P&Ls from somebody outside the business that uses QuickBooks to do that. And we had our own, I don't know what's it called, proprietary program for people in our industry for many years. And then we went with an outside accountant, and that's been very problematic actually in various ways. Because like you were talking about how the bookkeeper knows so much when they're on site. Well, I'm thinking an on-site bookkeeper. Like we used to have, they would know so much about what was going on. They could actually help you make decisions.
Yeah, it really depends on the scope of their involvement. That's a good point, because if you've got a fully remote contract bookkeeper that never sees anything except touching the money, there's ways to make that kind of relationship work. But I think it really comes down to what you really need from that person as a business owner, because I think sometimes it's that mismatch of expectations can be problematic, especially if you're used to having somebody in-house and then you shift to a remote contractor. And I mean, it's, and a lot of times there's those in-house bookkeepers are usually not just bookkeepers. A lot of times they're playing an office manager role at the same time.
Yeah. Well, that's okay. So the QuickBooks itself, have you seen a program that's easier to get reports from, or
I don't know about necessarily easier.
Cash flow, that kind of thing. I'm sorry.
Yeah, I mean, I don't know necessarily if there's one that's easier. I know like there's Xero has a different way of doing accounting, which some people like that better. But I would say, I mean, probably the simplest way to do it is, I mean, you can run a P&L report off of QuickBooks, and I would say the simplest thing you can do is you can plug in there's a cash flow report you can run from QuickBooks also, and it takes a little bit of cutting and pasting, but you can overlay the two on top of each other and see a more true reflection of what your cash flow numbers are and everything that came in and went out. It's the report I put together was a little bit more simplified because unfortunately there's no standard report you can just run. I wish QuickBooks would just let you run the report I show and just do it exactly that way, but it's not too hard to put together by hand. And that's the kind of thing that I would say most bookkeepers should be able to do that if that's something that you want to see.
Okay.
In part, were the questions that you asked, Dave, that's an important thing. So, Ann, we're ultimately going to edit this. I'd listen to it again, and I'd make note of the questions he asked. Dave, that might be something we can eventually get. I think you got a great list of questions that someone like Ann could say, we would like this from the bookkeeper, that you provided, Ann. And I think that's part of the gold he has. And go ahead. I didn't mean to interrupt you, Ann. Go ahead.
Yeah, no, that's all right. I know we have to end here, but I was wondering do you have a list of services online or something like that? This is the first time I've encountered your organization.
Okay. Yeah. I mean, you can find my web pages. I'll put it in the chat box. Let me just go ahead and do that right now here.
Are you also in North Carolina, Dave?
I am in North Carolina.
We're
in Raleigh.
We're about 5 miles apart from each other.
Just enough, right? You don't have
just enough. Yeah, that's right.
Step on each other.
That's it. Well, and I'm so glad you asked, because this is another reason why we created the roundtable, so businesses could come in, and have these discussions, because the needs of brick and mortar businesses are so much different than just, somebody who's just a standalone consultant, or someone selling in network marketing or something else. So that's where part of why we created the whole program is, so that we'd have an affordable way to be able to help brick and mortar businesses.
All right. Well, thanks very much.
This was great. It was great having you, and you got Dave's information, ours, and do stay in touch. We'll see if we can connect in Alignable. Pretty exciting, the stuff you're doing, Ann. There's a lot at stake at that, and I love to hear family-run businesses that it survived the pandemic.
Well, we did, but we're getting ready to sell actually, and we're
That's
we're
good.
trying to not be advertising that a lot yet because we're still doing due diligence and different things. But what we're going to do is we're going to still have a building. I thought that's what you meant by bricks and mortar, but I'm very interested in the whole accounting side too, because I've been involved in that a lot here. And we're going to need some smaller, a smaller system for this new corporation going forward, that's going to hold the building and the land, because the land got polluted and it's just ungodly how much it costs to clean up. So we're always struggling with the insurance company, but to get the funds we need there.
Well, and did you get Dave's direct email? And
I did.
If you want to save the chat, you can do that. There's a little at the 3 dots at the bottom, save the chat. And then Dave's, I put in both of our Alignable connections, but Dave does do this independently to customize for people for select clients. So
okay.
that's one of his skills. I'm not going to speak your availability, Dave, because you're pretty swamped, but he does do consulting to get people going on this.
Yeah, I'm kind of looking for a bookkeeper actually, but one for a very small, amount of activity compared to what we used to have. And I'm not quite sure where to look, but
Martin's got a great book.
Certainly paying whatever it's worth to the person, know.
Yeah. Well, you could reach out, Dave, you could pass her on to the bookkeeper, that I work with. But Dave does more of the strategic consulting work, right, Dave?
Yep. Exactly. Now, Dave, are you available for select clients to build one of these charts if they want to help them get started? Definitely. Yep.
Yeah, for hire. So
I never say no to that. So
I know, but he loves that. Well, he loves to empower people to be able to then have control over their own steering wheel, so they aren't driving with their rear view mirror, right?
Exactly. Yeah. No,
great,
that's the perfect analogy. I forgot to bring that up, but that's exactly it. Yeah.
So this .com is the website. Then you had an email address also, or?
Oh, I'm sorry. Yeah, I'll put that in here too. Yeah. You're going to be real surprised to see this email address. There we go.
No, Dave keeps down over. It's very hard to remember it too. I have one that's Martin at martinbrossman.com too. And actually, I'll put talk to Dave. Dave, I'll let you introduce her to my bookkeeper too, if she wants it. Okay.
Yeah. That sounds great. Yeah.
Okay. Very good.
This was great having you, Ann.
Bookkeeping information.
Yeah. Well, Dave can handle you with both, and I'm so glad. Thanks for being our audience tonight.
Thanks for being our presenters.
Yeah, and look forward to hearing about your success. We'll let you just go ahead and sign out.
Yeah, I'm trying to find the leave button, but I don't know where it went.
Okay, all right. Hold on a second.
So feel free to bug me out if you want.
I'll do it. Let's see. Okay, great. Take care, Ann. Bye.
You too. Thank you.
Did I sell you okay?
Yes, you did. Do you want to stop the recording?
Yeah. If I want to do one more thing. Okay. Because I screwed up in the introduction.
Okay.
And I want to do it again. And what I learned is if I stop and ever start the recording, we lose everything. So I've learned something very valuable. So let me get the presentation up.